JP Morgan warns miners ahead of the Bitcoin halving. SEC accepts Blackrock's ETF. Tether drops under 80 cents on Binance.us, depegging from the dollar. Nexa releases a pay-per-tweet program. Dynex gets a new mining pool and Malib endpoint, and OneZeroMiner releases a miner update. Let's get into all of that and more on today's episode of Blocks, where I cover cryptocurrency news as quickly as possible from the perspective of a cryptocurrency miner. Let's get into it. According to JP Morgan's research reported recently, the Bitcoin hash rate is continuing to reach new all-time highs as miners gear up for the next halving event, expected in the second quarter of 2024. Now you might be wondering, what exactly is this halving event? Well, let me break it down for the people that are unaware. During the halving event, the issuance rewards for miners will reduce from 6.25 Bitcoin to 3.125 Bitcoin. Essentially, this means less profit for miners. JP Morgan's report suggests that this reduction in mining revenues will simultaneously increase the production cost of Bitcoin. While historically, the halving event has had a positive effect on Bitcoin prices, acting as a floor price, it does pose a challenge for Bitcoin miners. The analysts at JP Morgan point out that miners with lower electricity costs will have a better chance of surviving the reduced rewards, whereas miners with higher operating costs may struggle. JP Morgan estimates that even a 1 cent per kilowatt hour change in electricity costs can cause a significant $4,300 change in Bitcoin's production costs. However, after the halving event, this sensitivity would double to $8,600, increasing the vulnerability of higher cost producers. So operating costs, particularly electricity costs, play a critical role in determining the profitability of mining operations. The steep rise in hash rate indicates increasing competition among Bitcoin miners. More mining rigs are being deployed in an attempt to secure higher profits. However, it is unlikely that this pace of growth in hash rate will continue after the halving event, unless there is a sustained rise in Bitcoin's price or a significant increase in transaction fees that can offset the reduced issuance rewards. In a significant development for the crypto industry, the U.S. Securities and Exchange Commission has accepted the application for a Bitcoin exchange-traded fund filed by Blackrock, one of the world's largest asset management firms. This move indicates that the SEC is taking the Bitcoin ETF proposal seriously and could potentially pave the way for broader adoption of crypto assets and products. The SEC has added BlackRock's Bitcoin ETF application to its docket and has requested public comments on the proposal. Once published in the Federal Register, there will be a 21-day window for the submission of feedback, which will be posted on the SEC's website. This marks the start of a lengthy review process that will be closely watched by the crypto community and industry. BlackRock filed its application in June amid ongoing regulatory crackdowns on crypto platforms for alleged violations of U.S. securities law. The company has chosen leading U.S. cryptocurrency exchange Coinbase to serve as custodian for its iShares Bitcoin Trust, which primarily holds Bitcoin. The SEC has previously denied approval for Bitcoin ETFs in the U.S., citing concerns about market manipulation and investor protection. Other companies, including Bitwise, WisdomTree, Wise Origin Bitcoin Trust, VanEck, Invesco, and Fidelity, have also applied for spot Bitcoin ETFs. Bitwise's application was accepted earlier this week. The number of applications combined with BlackRock's reputation as a financial powerhouse has generated optimism in the crypto space that a Bitcoin ETF may receive approval in the United States, as Canada has already done. Furthermore, it was reported that Europe expects its first Bitcoin ETF to be launched by the end of July this month. This product, authorized in the Channel Island jurisdiction of Guernsey after a year-long delay, seeks to avoid regulatory hurdles in the EU. USDT, the ticker for Tether stablecoin, has dropped below 80 cents on Binance.us. When it dipped to 94 cents at the start of regulation issues on the platform, Tether CTO clarified it was due to liquidity issues on Binance.us and nothing else. Regardless of the reasoning, at the very least, it demonstrates the volatility of the US cryptocurrency market influenced by regulation. Nexa has shifted focus from building the ecosystem and to promoting the network. In an odd and arguably questionable move, Nexa has introduced a pay-per-tweet program. This program will incentivize every user with a reasonable Twitter account who tweets about Nexa. The program has a monthly budget of 250 million Nexa tokens, which is currently valued at around $1,500 US. The pay-per-tweet is set at 200,000 Nexa tokens, equivalent to approximately $1.20. So by tweeting about Nexa, you could earn up to 400,000 Nexa tokens each day with a cap of 2 tweets per day. To ensure the program runs smoothly and to prevent spamming or bot usage, there are a few requirements. Firstly, your Twitter account must have over 100 followers or should have been active for a decent amount of time. Additionally, you must have a reasonable follower to following ratio, and the tweet must include positive Nexa fundamentals. Only using a $Nexa cash tag or a few words won't qualify. Also, each person is eligible for a maximum of 2 days or 2 pays per day to prevent spamming. Obvious bot accounts are excluded from the program. To receive your rewards, you'll need to join the Nexa Telegram group and use the tip bot provided by Andrew Stone, the lead developer. The tip bot will distribute the rewards to users who meet the requirements for tweeting about Nexa. Remember, your Twitter handle must be the same as your Telegram handle, and you must always post your tweets in the socials channel of the Telegram group. Additionally, make sure to use the hashtag Nexa and hashtag Nexa cash tags and hashtags in your tweet. To get started, link your wallet with the Nexa tip bot in a private conversation and enter the command given. I'll have links in the description below. After you share your tweet, it will be monitored, and if it meets the criteria, you will receive a tip worth 200,000 Nexa tokens from Martin or any other team member. Please note that the bot is solely for team usage and should not be refilled or used for tipping others. For privacy reasons, it is recommended to create a new empty wallet address using wallets that support Nexa, such as Wally or Atopolo. This program is designed to reward active Nexa advocates, so if you're only looking to earn Nexa tokens without being an active advocate, participation will not be allowed. Personally, as a content creator that tries to remain unbiased as possible, I will not participate in this program. However, as a viewer, you should be aware that content creators will be potentially compromised due to this program. Mining for People have launched a Dynex mining pool with 0% fees. For the past few weeks, there has been a need for miners to move off of Ecopool due to hash rate centralization going over 60%. Dynex is unique in that centralization is not purely dependent on hash rate either. Dynex uses Malib endpoints to distribute work to the miners. This means that there is a secondary centralization issue that could eventually present manipulation vectors by pool owners and miners alike. We saw this potential with large hash rate improvements based on type of work in miner releases such as OneZeroMiner. Luckily, there is some good news here as well. Mining for People not only released a mining pool, but a Malib endpoint too. From a mining perspective, remember you can specify multiple Malib endpoints. Finally, along with the release of a new Dynex pool, there is an update for OneZeroMiner. First and foremost, this release is designed to support Dynex Solve 2.3.0. This compatibility ensures that OneZeroMiner seamlessly integrates with the latest versions of Dynex Solve, allowing for even more efficient mining operations. So if you're an avid Dynex Solve user, this update is definitely for you. In addition to Dynex Solve compatibility, OneZeroMiner 1.2.0 also introduces support for machine learning and satisfiability, and MaxSat, maximum satisfiability jobs. This expanded scope of tasks opens up new possibilities for users to leverage the power of OneZeroMiner across a wider range of applications. So whether you're involved in data analysis, problem solving, or even research, OneZeroMiner is now ready to tackle those challenges head on. Moving on, one of the highlights of this release is the adaptive step size feature. This means that OneZeroMiner can dynamically adjust the step size during mining operations, maximizing efficiency and optimizing performance. With this intelligent mechanism, you can expect smoother and more accurate results. But that's not all. OneZeroMiner 1.2.0 also introduces randomized parameters. This feature adds an element of variability to the mining process, further enhancing its adaptability. By incorporating randomized parameters, OneZeroMiner can explore different configurations and potentially discover more efficient solutions. Lastly, but clearly not least, this release also boasts double precision accuracy. This means that the calculations performed by OneZeroMiner are now even more precise, ensuring the highest level of accuracy when mining and processing data. So if you're someone who values accuracy above all else, rest assured that OneZeroMiner has you covered. Now, before we conclude, there is an important note to keep in mind here. The hash rates in this version may appear significantly lower compared to 1.1.3. This is likely due to the various changes and enhancements incorporated in this release. However, fret not, they say, as the overall performance and efficiency of OneZeroMiner has been improved, delivering superior results despite the lower hash rates. This will take some testing, and I'm sure the community will get on it as soon as possible. That's it for today, sons. Thanks for watching today's episode of Blocks. Please share, like, and subscribe, and I will see you next Tuesday.